Hello, 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 hello. Happy CPI Thursday. How is everyone doing this morning? Hello, Christoph. Party people. There are no party people here. Are we having an inflation party? Good morning, Patrick. Good morning, Jacob. Good morning, Royal Palms. Auto insurance continues to climb. Good morning, Alan. Good morning, Legion Reaver. What else we got? Sterling. Good morning, Sterling, with CPI numbers in the chat. Shelter is still a problem. Yep. Let's see. I'm just scrolling through. We'll take a look at the what the Fed Watch tool also says. But it hasn't gone down that much. Wondering how to. Whoa, blah, 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 blah. Let's see. Yeah, Hertz is starting to dump Tesla EVs from their rental stuff. Nvidia keeps marching on. What is this though? To purchase nearly 16,000 of AI chips. All right, AI. Good morning, Jake the Snake. Good morning, Heinrich. All right, there we go. By the way, the Bitcoin ETFs have been improved, approved. I can't speak. There we go. But more importantly, this morning, we had core inflation rate coming out a bit hotter than expected, year over year, coming in 3.9 versus 3.8. Slightly down from previous 4, but this is still running pretty hot. I mean, it's almost double. Its core is almost double their 2 target. And, to get their adjusted average, which Bob and I still don't know what an adjusted average means, because you just have an average. If they're going to have an average of 2, wouldn't we have to be running below 2% for a while? And 3.9 is nowhere near below 2%. The headline inflation rate coming in at 0.3 versus 0.1 to 0.2 expected. Inflation rate year over year coming in at 3.4, so bouncing back up from 3.1. Initial jobless claims coming in slightly better, 210 expected, 202 coming in. Continuing jobless claims expected about 1871 coming in at 1834. So jobless claims still holding up, no disaster there. I mean, we're still at a slightly elevated level with continuing, but coming in better than expected. What else do we have? We have a 4-week and 8-week bill auction today. We'll be watching for any tail events there. And we got Barkin speaking at 11:40. Other than that, we have PPI tomorrow morning. We got Fed, Kashkari, but more importantly, we have earnings tomorrow. Let me just jump over there. Earnings tomorrow. We got JP Morgan, United Health, Delta, Bank of America, Wells Fargo, BlackRock, Citi, BNY Mellon. So this kicks off officially Q4 earnings season. So that's going to really set the tone tomorrow, especially after CPI today, since CPI is more important than PPI right now. Even if PPI comes in hotter, it's probably going to be discounted. So it's all going to be based off the earnings tomorrow. See how those come out pre-market. So far, we have Nvidia keep marching along. Amazon's up, Microsoft's up, Google, Meta, Apple. Where's silly Tesla? Tesla down. Oil trying to bounce back, but oil still caught in the trading range. We're going to see if Tesla breaks down today. Tesla just announced a wage increase for U.S. Workers. Groups, we're still looking. Energy, let me refresh this real quick. Energy still leading, financial still lagging. Interesting, financials lagging going into tomorrow's earnings. We will see, and that could be a reaction to the slightly hotter inflation print. Fed Watch, let me revise this too, because last time, about 10 minutes ago, I revised it. It was, or refreshed it. It was still looking at 6 rate cuts. And still looking at 6 rate cuts. The odds of a rate cut in March are still 64%. Going to be keeping an eye to see if that changes. So, still a lot of dovish stuff priced in. Fear and greed still right at greed versus extreme greed levels. Let's see what else is going on. Good morning, Amit. How are you doing? Happy New Year. What live stream date did you touch on percent B? It was it's now marked as not private, I forget the unlisted. It was what was it, the 22nd. But if you need to view it, you're gonna have to reach out to me. Reach out to me, or somebody probably has posted with the private link in Discord, or send me an email. So yeah, Legion Reaver, check the Discord. Everything's in there. Thank you, Legion Reaver. Thoughts on the market to possibly temper number of rate cuts based off today's? Well, the market isn't doing anything yet. You know, and we're still getting massive money stimulus from the federal government. I think they're going to try to keep the economy propped up however they can, at least running above zero for anything until the election. So we're going to see. Let's see what else we have. What else do we have? So, all right, S&P. By the way, the little area we talked about yesterday provided a really nice topping area yesterday. At this point, we had the quick sell-off. There was a little mini double top, which was really tough to trade unless you were really trading it on the super short term with just a break. But that's we're watching this. I mean, it was useful for, if you look, it could have brought it down to about 48.07. We tailed through there, but then low holding at that area. So I'm watching that area just at the open. And you also had the spike low yesterday afternoon right before the close. And you have the prior resistance becoming support. So this is a very key area going into the open. That's what I'm keying off of, going into the open. Unless something really changes in the next few minutes, it's around this 48.06, 48.07 area. On the longer term, let's do a couple things here. We have, if it does rebound, we're already through that 87.5, so the 87.5 rule is done right there. The key levels now, if we sell back down and we get through to this 4,800 area, I'm using 47.87 to 47.89, and then we have 47.70 to 47.72. Those will be the two key levels I'm using today and tomorrow if we break through the earlier established low. To the upside, above 48.24, I'm looking for, if we really go through that, key resistance then is about 48.35, above that 48.41. If it breaks above the swing high set at the end of December, 48.59 and 48.76 are key. From a longer term trailing perspective, CPI is important still, my man. It's not gone away. It's not gone away. From a longer term perspective, a decent trailing level is still now at this 4,700 area. A decent trailing level into that. But that only could take us back to the bottom of the weekly rotation zone and the the prior resistance level and the breakout level. We really have to start busting through at least this 45.50 area to start doing some technical damage. Now, remember, weekly cycle's still headed down. Daily cycle's getting to that topping area. So I am poised for a rollover pattern. There we go. Same thing for the NASDAQ. Cycle's getting to the top on the daily, still headed down on the weekly. We are in, just missed the 87.5 area this morning. We are in double top pattern. This is technically it's still reversing this whole move. This is just a sideways move, and this coming in really right there. Also, if you look here, the first target on the double is roughly, I mean, if you're going to say it's cutting through these wicks and you're going to say this started the move, then fine, but you'd still, the areas I'd use are virtually the same because it'd be the gap fill from the contract roll. would be the first area, and then this low candle body, this 15,800, 15,807 area, and then the prior breakout area. So the doubles, whether you like to use that or not, and the alternative targets are still pretty much the same. If it were to close below 16,334.25. Now we're a long way off from there. That's just for the bigger perspective. For the people who don't tune in every day, we've already broken through these, and this doesn't give us much help with the quick triggering double. So key area I'm watching for the breakdown of this is roughly this breakout area, this spike low, and where it spiked low this morning. 16,892 to 16,9 is my key support area. Can't get overly bearish unless we start breaking below that. To the upside in the NASDAQ, about 16,995 to 17. Above there, 17, well, minor would be 17,040. Then to really reconnect with the 87.5 is 17,061.50. Above that, I'm revising these right now in the short term to the reverse harmonics. And we're looking at 17,269 and 17,373. Should we really break above 17,120? In case you can't tune in on a regular basis, that's where we sit there. But I'm still watching also because daily cycles are getting to the topping area. We have divergences set up before, and we could be rolling over in cycles. So I'm watching for a topping pattern also in the NASDAQ. The Dow caught in sideways congestion. There's nothing going on right now with the Dow. The minor stuff, if it does rebound and take out the highs from January 2nd, the major target is 38,274 in the short term. The breakdown level has got to start getting below about 37,600 to really start a breakdown. Russell's still caught in the range short term. You see the buying pressure below this 1969 area. If we want to fine tune it a bit, you can say roughly about 1966. So breakdown level is now about 1966, but that's also key support. Is really got to get through there with some momentum, and key resistance 2004. So unless that, it's only trading micro patterns. Those are the levels I'm interested in at either a breakout or a breakdown. If we do break down, my key target beyond the lows from the 5th of January would be around this 1920 area. The VIX, no fear whatsoever. So I'm watching 1235 on the downside. That's if we trade low. The only thing today that I'll be watching is if we rebound back above about 1295. The DAX still also caught in the range. Nothing has changed from our analysis there. We have the 10-year notes with a run up, a run down, and back to roughly where it's been trading the last few days. So nothing new there just yet. Going to be really watching this going into earnings tomorrow. Now, what's more important? The yield, again, spiking down, spiking back up. The yield now started to climb again. That's why I hate triangle patterns. They are garbage. They are too neutral for probabilities. Coming back down to the 50% level and bouncing up. I'm going to start seeing if it sustains above 4.06. I'm watching that today. 10-2s. We were above that 25 minus 25 basis points early and dropped back down. I'm going to keep watching this area, that minus 25. We were slightly above there when the CPI came out. So that is still key because we start moving above there again. I'll be more confident in the rollover play. Right now it's retreating from that level. So we could be getting a nice little bounce back. Dollar index still caught within Friday's large range. A little failed breakout, a little failed breakdown, and back in there. Still trying to move up, just like the yield. So I'm going to be keeping an eye if the dollar can sustain something above about 102.30. Crude in a wonderful, silly triangle pattern, but even if it breaks above yesterday's high, you have major resistance at 74. So it's only scalpy stuff from there. Then above there would be about 74.85 to 75. This is just getting into a longer term consolidation, trying to build. What's interesting is just trying to build a more stable base. Also remember, on the weekly basis, unless we get some major selling today and tomorrow, we're still closing above the weekly 200, which has been a major floor, you see, going back for a long time. So I can't get overly bearish unless we close below that. Natty gas, we've got a nice little 2-day pullback, but still being patient with the cycles moving down. Gold, come on, gold. This is I'm just keeping an eye on this. This is a very flat, sloppy thing. I was just keeping an eye on this 2048 level, but don't trade this as a double. I was just going to look to see where these levels came out. It's just garbage at this point. We're back just in consolidation. So that's where, let's go. There we go. Things are taking a little longer. Keep an eye still on yesterday's high, because a technical close above yesterday's high could lead to a shorter term bounce, but you see still selling pressure. CPI, it ran up and then back down. Just going to fine tune this line just a little right here. But still, the gold can't get any short-term traction. Still long-term bullish signals there. What have I missed? All right, thanks, Legion. Thank you, Legion Reaver, for letting everybody know what's there. Yeah, I really appreciate that. Thanks for just answering all these questions. Yeah, and I mean, they're right. It's everything set up to 0.125. Here's the fib settings. If you look at here, just see everything set up at 1.125 increments. 0.125. I call them harmonics. They're like the intervals of music, and they work better, I found, than fibs. But you know, those are the setups I use regularly, and I've been using those for years, over 20 years. I think over 25 years at this point. All right. The yen confirmed and officially finally triggered the double, closing in on the stop reduction territory today. The next targets, really watch this 147.35 area. Also, the 62.5 is right there. Really pay attention to that on a closing basis. Why? Then it would shift the probabilities to even, hey, we could keep running. We could keep running in a key breakdown area is 148.35, and then the 75 harmonic is 148.81. Euro, with the dollar still holding up, I'm watching for euro to possibly break down, but nothing yet. In order for me to get in any rally mode in the euro, it's still 110 is very key, and it was rejected from that levels this morning. The pound, nothing. Spiders, we are in potential long-term double top territory, but nothing to do yet. Nothing to do yet. Long way off. Might never trigger. 476.94 on any weakness today into the open. Gap fill would be 476.56. Major support coming in at 474.75. The breakout levels, if we get above 477.55, you're looking at 478.94 and then 479.98 to 480.33. Qs, also potential double territory. Nearly filled the gap. Did it fill the? Yes. Hold on. I don't remember it. 409.52. What was the high? Oh, it filled it exactly to the penny yesterday. So that gap fill is done. Slight gap up this morning. So the gap fill to yesterday's close would be 408.50. Major support coming in about 405.90 to 406. Next key level, based off the 87.5 harmonic and the close above the 62.5, is 410.72. And then we're running up to 412.50. And then at this point, the reverse harmonics would give us 415.12 and 417.32. Bitcoin, retesting. Remember, we got the ETF approval. Same levels still, 48,922 is on a closing basis. Still holding the breakout levels. Now been tested 1, 2, little sell off this morning, but not testing the breakout level, so that's really key. If it starts breaking back down below about 44,950 and we close below there, I'll sit up and take notice. Other than that, 48,922. And if we close above there, the next major target is 55,615. Tesla, barely holding on at the 200, testing it. Yesterday, looking like a gap down today to 230.92. This is right at the key level. So I'm going to be paying attention to Tesla. Now, its daily cycles are at a bottom, and we are getting oversold conditions. Yesterday's high, if it follows through, I'm watching that because that would be a very short-term percent beat buy with a possible bounce to only the rotation zone. And you have the 50 right in the middle right there. NVIDIA, I hooked up the longer-term harmonics on the weekly. You see from the weekly low on Monday, October 10th of 22 to this high, August. You might be wondering why I'm not using this high, because this is the higher anchored high that set up this consolidation pattern. This tested it, and then it kept making higher highs. So this is the better suited level because it gives a longer pausing area. That gives us 552 essentially. Above there, 601. Now remember, these aren't trying to capture stuff to the penny. So if you use this, you'd be looking at 552 to 555. It's giving you a range. So that's where that is. What's the spot ticker? What do you mean, what's the spot? You got to go off of one of the spot for Bitcoin. It depends. I don't know what, each one can use a different spot. There's no official spot. It's sort of like FX. I use Coinbase. So that's what I'm using as my spot. And remember, there's like 11 Bitcoin ETFs rolling out. 11. Is there a new... Oh, you want the spot on that one. The MSTR MicroStrategy. Oh, you don't pick on the apes, Sterling. What else? I've been watching still Apple. Apple still following through. Still trying to see. It looks like Apple's trying to also gap up. If we bounce back for the CPI rather strongly today, we could see some runs because this is our weakness has already been bought up. So I'm really paying attention to this going into earnings tomorrow, that we could snap back pretty decently for this. So I'm going to go now, since we got 2 minutes to open, really be watching. We're getting above the key little support level. But if we start moving with a positive tick above 48.30, I'll be paying a really close attention to that 48.38 level as a short-term trigger, and then the 48.41. By the way, the tick, besides some selling pressure at the end of the day, but a quick bounce back, really start watching. You see how yesterday morning, this is what I'm going to be watching to see if something similar to this. See yesterday morning, or how even through the prior day afternoon, you see how this, come on. See how this just kept building up. You got a little selling pressure over lunch, but you see how this bull. I'm watching for to see if we start making higher lows in the tick if we get any selling pressure in there. That's what I'll be watching. So that's what I'm going off the open, especially if we start getting above that 48.30 level in the S&P. Going to be watching if we do spike down to see if we start making a base of higher lows throughout the morning. All right, that's all I have for you this morning. Thank you for tuning in, and I shall talk to everybody. Remember, PPI and more importantly, Q4 starting off the bank earnings tomorrow. So, and United Health and Delta. So pay attention to that. Even if you're not trading those stocks, I check in with how the earnings are unfolding pre-market. Talk to everyone later. Bye for now.